Good morning, everybody. Welcome back to the Opportunistic Trader. It's 10:45. We just had the Department of Energy inventory release for oil, and we're joined now by Andy Lebow of Commodity Research Group, who's going to be helping us break down the figures. How's it going, Andy?
It's going good, Michael. How are you doing?
I'm good. I'm good. We got a lot going on, which is
Oh,
always good for the site. A lot of trades, a lot of volatility across all markets. So I guess let's talk about the latest DOE report.
okay. I thought the latest report was I thought it was bearish, really, for a couple of reasons. Crude stocks built by 5.8. The street was looking for up 2.4. The API had reported a higher build, but again, I think the market ultimately is going to focus on the EIA report, owing to the way the report is surveyed. The other thing on this report, and it's important, is the domestic production number was revised upward. U.S. production was revised upward by 400,000 barrels a day from last week. Last week they had 11.2, and this week they're up to 11.6. That's a big number, Michael. Not a. I can't say it's um, a shocking number, because in the short-term energy outlook they've already revised all the U.S. crude production numbers by quite a bit. By close to this 300,000 or 400,000 barrels a day. So, even though that number was sort of in the market, I think this weekly brings it home, and that clearly is bearish. Gasoline, which had two nice reports in a row, built by 1.8. The street was looking for a draw of 2.3. I was looking for down one. And gasoline, it looked like it had a couple of bright spots here, but this is not what gasoline is looking for. And you start looking out, and it's sort of hard to see how this gasoline surplus is going to be alleviated. We're 12 million over the 4-year average.
So wait, we're
Maybe
12 million over the 4-year average.
for gasoline stocks nationwide, yeah. The other thing is Pad One just can't seem to get out of its own way. We have way too much gasoline in most of the surplus is here in the Northeast, which isn't good for the NYMEX contract, which is deliverable Northeast. The only good thing we could say about gasoline for this week is production was down, and given the cracks are relative to Brent, just about negative. They were negative for a while last week. Maybe refiners will start making less gasoline and making more distillate. They should, because the cracks are, you can see the heat to gas, and you can see where the cracks are. Distillate was bullish again, drew by 2.4. Their stocks are 10 million below the 4-year average. So distillate, for a lot of this year, the diesel has looked bullish, and this report changes nothing there. Cushing built right in line with expectations at 34.3, and that's gonna continue to build. So this isn't really the type of the type of report that's going to really turn the market around by any means,
So
in my
with all these
opinion.
inventory numbers that you were just talking about that are bearish, where was this, like, what was the market? It was just 5 weeks ago that we were basically at $77, and here we are at 61.70.
Right.
What's changed in that period structurally, or is the answer nothing? It's just more price action.
No, I think what's changed is that there's been um, a fairly aggressive build on crude stocks here over the last 6 to 7 weeks, and it's definitely, I'd say, twice what the market had expected on the crude stock build, and that's owing to these higher production numbers. U.S. production, we were all using U.S. production in October at, say, 11.1 or 11.2, and November at 11.3, and now it's 11.6 million barrels a day. That's a lot. That's every day. 300,000 barrels a day every day. So that's one of the reasons why crude stocks have built so much during October. So that's a change, and of course macro. Globally on the supply demand for petroleum. There's been huge changes in the last 4 or 5 weeks. Huge.
Right. So where do we go from here? We're trading right now 61.55. Where do we go from here?
I, I I think that what's going to happen is, and we're seeing it already. OPEC realizes that they've got to cut production, and the big structural change globally has been the amount of supply that they've put on the market. They've put on this. If you took out, I think we might have mentioned this last week, but if you took out Venezuela and Iran from last May, the other OPEC producers alone have added over 1 million barrels a day. So, they're looking at the same thing all the barrel counters like myself look at, what's the supply for their crude. And, in the next half, the supply for their crude is only going to be 31.5 million barrels a day. Right now they're producing 33. Let's say Iran cuts back 500,000. So that's 32.5. Let's say Iran loses another 500,000 and Venezuela loses some more. It's still 1 million barrels a day global surplus. So what does that mean? In order to prevent like a complete, a further price collapse, they realize they're going to have to cut production. And what's happening today, or later this week, the Saudis and Russians are beginning to talk, and say, hey, we may have to cut back production. The U.S. granted waivers, and maybe, in cutting back production, they'll prevent, the market from really coming off further from here. I think they're going to have to actually.
I even remember going back speaking with you 2, 3, 4 months from here. You were talking about. I remember asking you the question. Where do the Saudis want oil prices? And I think you told me at the time like 65, 66 is what you were saying. And
TI, yeah.
Yeah. What are your thoughts? Has anything changed on that?
No, I think I think 75 to 80 is what they want, and I think it looks like, and certainly the Russians want higher prices as well. So the Saudis now are producing 10.7. They said they would maybe get up to 10.9 million barrels a day, maybe 11 million barrels a day, but in reality they need to go down to like 10.0, back to where they were before they increase production, because what's happened to them is that Iraq, Libya, even Libya and Nigeria, the UAE, that everybody has this is unfettered production increase, Michael. So it's everybody's producing as much as they can.
So tell me
And
about
that
the
does, and
effect.
that really, that obviously you can see what happened to price.
Right. So let's also talk about the curve, because we're looking at Dees crude right here, Dees 2018 crude, which is 61.50. Where is, the curve, looking at next 2019 Dees, or even looking at summertime 2019?
Yeah, let's take a look at some of these curve charts, because what's happened in TI, actually in Brent as well, but more in TI, the curve has collapsed. It had been fairly significantly in backwardation, like DSRED, just a few months ago. In fact, I want to get this. Just bear with me while I get this chart up. But it's gone straight, almost straight without stopping, from backwardation into a nice contango. Similarly to the second half of the year, June D, same thing. They've really just collapsed. Now, why have they collapsed? Like if you look at this DSRED chart, DES 18, DES 19, on September 25th, it closed at 335. And last I have is like around $1.50 contango. So it's gone $5 in favor of in favor of DEIS 19. And why did that happen? Because if you look out, you start taking these production numbers, and you look out at what the DOE is saying, and what I've changed some of my own estimates, but the DOE has crude stocks in April going up to 480. At the end of April, we're at 430 now. So they're saying that over the next 5 months, stocks are going to build 50 million barrels. That may not be right, but you look at that, you go, oh my goodness, and similarly, and globally, people are looking at, we're looking at how inventories could really build here, given where production is relative to demand, and it's gone.
So you're
Well,
saying so.
the Brent curve is still backwardated, but and then there's still a lot of uncertainty on all these numbers, Michael. You know, you don't really know what's going to come out of Iran, and we don't know what Saudi and Russia's going to do.
Absolutely, trying to figure out the crude 12 months from now.
It's tough, but what I'm saying is that the prospect of this type of supply on the U.S. market, for next quarter, for first quarter into second quarter, is daunting. It's caused these things to go straight down. It's caused the curve to go straight down. And now the other thing we have to figure out, Michael, is what's going to happen. These sanctions are temporary. Then what? It's only through April or May. Not the sanctions, the waivers are temporary. So then what? Or are they going to force Iran to go to zero, or is Iran going to be negotiating with the EU? There's a lot. They are negotiating with the EU. Are they going to be able to buy time and come up with some kind of solution with Trump? You don't know.
Yeah, no, it's definitely a lot of uncertainty, a lot of different moving parts, whether it be from a lot of different actors, and even just last night with the elections in the U.S., there's a lot of different moving parts in the United States, let alone all over the world. So that's definitely heavily impacting the market.
Yeah, and volatility for crude has spiked up. Last I looked, I think the second nearby was over 30%, 31%. For good reason. You're talking about big numbers here. You're not talking about like, all right, if we lose demand next year, we could lose like 200,000 barrels a day, okay, off the growth, off projected growth, maybe more. Maybe it'll be 300,000 barrels a day. The DOE just revised U.S. production up 400,000 barrels a day. These waivers, there's like 300,000 or 500,000 barrels a day being bandied around. Saudi and Russia. That could be 500,000 barrels a day. So the market, was wringing its hands over what really is a minor number in the big supply demand picture. Just wringing its hands over how slowing global growth is going to crush demand. Is going to crush demand. But the reality is the numbers are not that big. The
other thing, I guess if you can comment on this as well, I guess also ethanol mandate possibly changing to E15, that would also reduce demand.
Exactly, and that's a good point. There's two big things coming up next year. One is the E15 mandate, and we'll see what.
When will we get more news on that?
That'll dribble out over the next few months. There's obviously a new Congress, so we'll see. We'll see what happens, but that's going to reduce demand. That's another bearish factor for gasoline going forward, because it is going to reduce them. It's going to reduce petroleum demand. But however, alternatively, there's this big there's a change in in shipping specs for 2020 that's going to increase diesel demand by as much as like 500,000 or 600,000 barrels a day. Another big number. The big numbers going here, Michael. These aren't like little marginal changes,
Sure.
in the market. So, it all makes it interesting. And I think we'll see what the Saudis and the Russians really come up with. If there are production cuts in the offing, and there's an OPEC meeting on December 6th, there's a committee meeting this weekend. Maybe we'll learn more on that, and maybe the market can start holding itself together. But if they really fail to come up with some production cuts, there could be some further downside here.
Yeah. All right. Well, hey, Andy Lebow of Commodity Research Group. Really appreciate your thoughts following the DOE report and just on crude oil, where we stand as a whole. Thanks a lot for your time. We'll speak to you next week.
Okay, thanks a lot, Michael.
All right. Thanks, Andy.